So guys, it's time to start our
Oh,
class.
okay. Let me stop. I'll get out of there.
No problem. We can go back to it. I think what I'm doing is going to be fairly quick today. Um, I see one new, no, Bill, you were here last week, so you've been with us at least 1 week. So what I'd like to do today, I'd like to share with you some code that I've been working on. And I had some problems with it, so I did some troubleshooting by making print statements to help me find out what the problem was. And I pretty much figured the problems out except for one or two, and I'm still working on that. But what I'd like to do today, it's a different strategy. I didn't dream it up. I've heard about it over the years, but I don't know anybody here that's presented it. Can you guys see my code?
Yes.
Okay, I made it a little bigger so it's easier to see. So I traded for all of the 60s and the 70s as a breakout trader. I was raised on a book called How I Made $2 Million in the Market by a guy named Nicholas Darvis. And that's really the only thing I knew. And because I made money throughout the 60s and the 70s, I thought myself some sort of a stock market genius. When I got here in October of 2019 and decided to come back to trading, I started the Darvis method in January of 2020, ran it solid it wound up being 50 days. I ran it about 40 days. And then it took another 10 days for the last of the purchases to either stop out or whatever. And it turns out I pretty much broke even, and I was sorely disappointed. And I did not realize that over 40 years, things change. and the old breakout methods that worked in the 60s and the 70s weren't working back then. Anyway, the thing that I'd never looked at is buying on dips. And so I decided recently to look in on it, research it a little bit. And I'm just going to show you what I'm doing tonight. I'll show you the code. I'll show you what my charts look like. I'll give you the code so you can play with it. I still have a couple errors in there I can't find, and I'll ask you to help me with that if you'd like. But anyway, the buy on dip strategy, picture a V where the top of the beginning of the V is 2 bars back. The middle of the V or the bottom of the V is 1 bar back, and the top right-hand corner of the V is today's bar or this bar, whether it's minutes, hours, or days. I'll call it days for today because that's what I'll be doing. So if you can say that the middle bar, and if we go by one thing, I'll say by the close, if you can say that the middle bar closed lower than the bar to the left and the bar to the right, and today is the day on the right, then you can say it's pretty possible that this is a turnaround in the market, because the market can't go from down to up without doing that V shape one way or another. Now, granted, there's some other possible combinations. It could go entirely flat. But basically that little V shape, and it's really tiny, it's 2 days worth of trading. If it makes a V, I'm going to assume that that's a dip and that I'm going to buy it. If it makes an A shape, in other words, the middle of the V is up high, and today's bar is lower than yesterday's bar, and 2 days ago bar is lower than yesterday's bar, then we've seen the opposite. We've seen the upside down V, where price in however you're measuring it has gone from up to down. So that's really all there is to it.
Richard, quick question. Do you have a longer term moving average that filters whether you're going to take longs or shorts, or is this the whole thing?
No, I got 3 moving averages. I'll show them to you right here. I'm using a 10 and a 20 because I haven't optimized this yet. I can't optimize it until I get the errors out. And there's a couple things it doesn't do that I want it to do, and I thought it was going to work, and so I've got to clean that up first. But to me, there's no sense optimizing code that isn't working the way I think it's going to work. And I'll explain that later. But I just picked 10 and 20, just to pick any old two moving averages. So I've seen numbers with that. Some stocks do well with it, some don't. I don't care. When my code works and does what I think it's supposed to do, then I can start optimizing. And so I use the two moving averages, what I call the fast moving average and the slow moving average. I use what I call a trend average. You can call that the super slow average or whatever you want to call it. It could be any number that's bigger than the other two. I just picked 100 just to have a number because I need the program to be able to test itself and to work. I also decided that I wanted a stop loss, and I also wanted it to be programmable, or I want it to be optimizable. So if I just code in a stop loss, it's not optimizable because I have to go change the code to make it go away or to come back or to do what I want to do. However, if I make it a 1 and then say 0 is stop loss is not enabled, I can then later in my code, when I'm optimizing, I can have the optimizer check both conditions and it'll tell me whether my stop loss helped me or hurt me. So I'm trying to put things in the inputs up here that I can optimize later. And I've done none of the optimization. The last thing I put in here was a stop loss percentage. I don't like stop loss percentages, but I'm going to use it. I'm going to try it. And if the optimization says it's worthwhile, that's fine. So yes, I'm doing what I can with this to allow me to optimize when I get it cleaned up. I'm using the $100,000 bankroll just because when you do a year, you get a pretty good number for percentage. I don't usually do that. In my personal trading, I'm usually trading $1,000 or $2,000 a trade. So I use that as my number. That gives me a more realistic number of what's going on. I tried exponential moving averages and, you know, they seemed, you probably all know that the exponential moving average moves a little faster and hugs the price a little bit closer than a regular moving average. I noticed it didn't seem to make a difference in the testing that I've done. So I'm just using a regular average. I will probably, when it is time to optimize, I will try probably manually the regular and the exponential and maybe the Hall, I don't care, any different moving averages just to see if there seems to be any difference. And then if there seems to be a difference, especially between stocks, I'll put that in as a switchable thing so that 1 might be a normal moving average, 2 might be exponential and so on. So I could code that and then I could fiddle around with it. I was having trouble with printing on the screen. So I put this code in here. I had it print every bar at the low of every single bar on the screen. And of course it worked because I was having trouble with some things that would print and some other things that wouldn't print. And I couldn't figure out what the problem was. And I pretty much figured that one out. So I broke it down into little modules, as I always do. I try to go from the big picture and find out, well, what's the mission? And obviously the first mission here is to buy. And so this is my take a position code. I'll explain it. First off, here's what this does. I'm going to start with my position has to be 0. Because once I make this purchase and I get into this code, I'm going to set a stop loss. I'm going to change my position. I'm going to do a lot of stuff. So I don't want to be coming in here every time that I'm long. I only want to be coming in here when I have no position and I want to see if it's time to purchase. So this code here, this asks the question, are you looking at a V? Because if the bracket 1 code or the bracket 1 bar, which is yesterday, is less than today, and the bracket 1 bar, which is yesterday, is less than 2 days ago, then yesterday was the bottom of the V. I can say I now have a V. This is a dip. It's time to buy if the long moving average, which I'm calling trend MA, is going up. And all I care about is that yesterday was less than today. So that's my filter for I cannot get into a trade if in this case, the 100 moving average is not moving up. So that filter is in there all the time. So if I get here.
What role
Yeah.
does your 10 and 20 play, if anything? Your 10 EMA and your 20 EMA, does that play any part? Or just the 100 EMA?
The 10 and the 20 are used for a moving average exit.
Okay, so
I'm playing with that too. I want to be able to use that as time goes on.
okay.
But what I'm really doing, I'm using the 10 to see if I have that V shape or that A shape. Okay.
Okay.
So the 10 is using that. In a way, I could throw the 20 out and this would work. I just wouldn't have the ability to exit using the moving average crossing down. This is a long only strategy. So all I'm worried about is that I get out safely in the event that the price goes against me.
Okay.
So yes, I do use the 10 and 20 as an exit, but I don't do anything with it in the sense that I don't take any other action with those moving averages other than as an exit trigger.
Okay.
All right. So anyway, so this is the normal stuff that you do. You figure out how many shares you're going to buy. You buy some shares. And I was printing the date and the low. What I found out was I was trying to do, what was it? Entry price. You may all know that entry price is a reserved word. If you spell it right. And if you click on it, you'll find out, if you left click and go for the definition, you'll find out it represents the number of positions ago when something happened, when the entry actually happened. I found that I had problems I've spent hours on this, and I kept finding out that I would purchase on one bar, and every time I would purchase, I would exit on the next bar. And I thought, what in the heck is going on? Well, the reason that I had that problem is normally right here where it says low, I'm trying to set my stop loss price. You would normally set your stop loss price based on your entry price and then subtract from that whatever you want to make that level be down below price to give price a little bit of room to move. And I use stop loss percent, which I set to 2% when I started with. So I set it to 0.02. And so when I made 1 minus stop loss percent, I'd get 98%. And so I would say, take the low, take 98% of that, and that's where the stop loss is going to be. Now, I did have my purchase price here, and it would not work. And I put a print statement in, and I printed what it was, and I printed the entry price right here. And guess what? It prints an entry price of 0, no matter what I do. It's like, that's weird. And I couldn't figure that out. I could not figure out a way to make it anything other than 0. So I said, well, if I'm going to I would like to get this fixed so it'll work. Right now it doesn't work. But if I change entry price to the low of the bar, then I pretty much can set a decent stop loss 2% below that, and I'm fine. Don't like this, but it made this thing work, and it will continue to work using that number until I figure out what's going on. So all I really did was I put the entry price, I printed right at where I did the purchase, I printed the entry price, and I printed what the low was when the purchase was made. I did a lot of printing in here because I had about 5 problems when I started this. And I had so many problems, I wanted to print everything just so that and on the screen, in the strategy, so I could see that they were working well or not working well. In fact, let me shift for a moment to the actual price and to the actual chart, and I'll come back to the code. If you look closely at this code on the left, you'll see that it's full of numbers and printing and all kind of stuff. I'll go through that when we get to it, but you'll see that every purchase, every stop loss, every reversal is shown in here in either red, green, or black printing. And that's all me making print statements trying to figure out what's going on. For example, you'll see right here above the 15th of November in red, uppercase, entry price equals 0.00. That's what it's been all along. I've never seen any number in there other than 0, and I don't know what's wrong. Maybe I'm using it incorrectly. Maybe it doesn't work anymore. I don't know. But anyway, because I needed to look at everything and find out where my problems were, I did a lot of typing, a lot of printing on here. And I decided to leave it in for you guys, because if you're going to take this code and play with it, you'll still be able to see where all the prints are. You'll still be able to just put 2 slashes in front of them if you want to make them go away, or erase them or get rid of them. And in fact, I did that once when I was testing. I went in and deleted all of the print statements. Well, so this code right here basically asks the question, is it time to sell? And as I described, if it's time to sell, you're on the low side of an A-frame shape, where 1 bar ago the price was above what it is right now, and 2 bars ago it was below what it was yesterday or at the last bar. So that's the upside down V shape. And so I say I want to exit only if my position is 1. Obviously, I have to be long before I want to exit. These 2 statements say, look, if the fast MA is greater, the fast MA yesterday is greater than today, and it's greater than 2 days ago, then it's the top of an upside down V. Therefore, we have a peak instead of a bottom or a V. And so that's where I decide to sell all the shares, change my position to 0. And the reason I use my position instead of market position, which is a reserved word, is I will eventually pull all of this code out of here and put it in a show me that I would only use when I need to look at what's going on. In a show me, I can use my position. In a strategy, I can use my position. I cannot use the reserved word market position in a show me. So I consider that a useless piece of code. Since I can only use it in a strategy, I have to have some way of doing the same thing in a show me or an indicator. So I just said, I'm going to call it my position and use 0 and 1 and -1 for long, short, and out. So that's why you will not see market position in this code, because I can't do it in the show me, which is where I'm going to put a lot of this code as time goes on. You might notice that I jumped the value of each of the print statements by 10. I started with 11, then I did 21, then I did 31. And the idea, of course, is that if I later want to put more in, I've got the numbers in between and they won't interfere with each other, and I can keep them pretty much in order. And you'll also notice that I duplicate. This is redundant. I'm duplicating. This says I sold. LX means long exit. And peak says, hey, I did a long exit at the peak. And here I just said sell on peak. Again, it's redundant. I don't need it, but I just wanted to write everything in text to just see what the heck was going on. I had a lot of trouble trying to see the stuff that I was trying to print. But anyway, so this says if it's an inverted V, time to sell. Here's my exit position where I do actually use the 2 moving averages. And I say, and there's really only 2 things. I need to be long, and the fast moving average needs to have just crossed below the slow moving average. That's the standard moving average cross exit. So if that happens, you'll see on my chart an MA cross LX, okay, for long exit. And again, after that, I go to position 0, and then I print stuff. So you'll see there's lots of print stuff in here that'll probably go away. And once I get this cleaned up, working and ready to optimize. This is my stop loss position. Again, got to be long to do it. And I asked the question here, is the low less than the stop loss price? So let's say I'm at $10 and I set a stop loss at 9. And let's say that my low is at 9.25. Well, my low at this bar is not less than the stop loss price, so nothing would happen. So this part of the and would not be true. None of this code would be executed. But if my stop loss price was 9 and my present low in the bar would be, my present low is less than that, then my bar has just gone through that stop loss, and so it's time to get out. And again, I wanted to use entry price here. I wanted to use entry price throughout the code wherever I spoke about the low, but I found I couldn't do that. And I hopefully will figure out how to do that. And again, this is just redundant stuff to pretty much write everything that's in. I do want to put profit target code in here. So I left this in here to remind me so that I can't forget. I do want every bar that I'm long, I want the ability to say, has price moved up enough that I am now far enough away from the stop loss price that I should move the stop loss price upwards? I never move it downwards. I only move it upwards, which is the way you do it. And so again, I say, okay, if I'm long, and if the low, if the low minus stop loss price is greater than the low, blah, 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 blah. This basically says, if I am below my stop loss price, and this was a lot simpler when I could use my entry price. But anyway, it says, okay, if the space between where my low is and where my stop loss price has increased, I can now move it up. So I say, okay, now go to the low, subtract from it the low times the stop loss percent, which for my testing, I used 2%. And then I created an error with that later, which I'll tell you about. And then, of course, all I'm doing here is I'm printing what's going on. I print the stop loss price. I print at the low what the low price was, just so I could see what's happening to try and figure things out. And then the last thing I did, I wasn't even sure at one point when I first started having errors, whether this was taking longs or getting me out of positions. So I said, could the code be lying to me? Because it looks like from looking at my screen that I didn't get an exit here. So what I would do, this 2 lines of code or 2 statements says print a 0 or a 1 at the top of every bar. Print a 0 if you're out, or a position is 0, or print a 1 if you're long. And that's all this does. This was just a way for me to verify as I go through the ups and downs that the zeros turned to 1s when it was time to buy, and that they turned back to 0s when it was time to sell. So this was how the code was when I was heavy into the troubleshooting mode and trying to figure out what was going on. So let me walk you through some of the things. So you can see my chart now, right?
Yes.
Okay, thank you. Okay,
Yes.
so we'll start over on the right just because there's some problems that show up right away. Now, notice that the red line is the 10 moving average, the blue line is the 20 moving average, and the black line is the 100. Notice also, of course, that it's been flat for many, many bars, which tells us all that it's going to beat you up on the getting in and out unless it goes one way or the other. But the first thing I noticed when I looked at this chart is, remember my definition of what a peak is? Okay, can you see where my hand is? And I just clicked on the mouse. Can you see where I'm clicking?
Yes.
Isn't that a peak? Isn't the price lower on either side of that peak bar than it is in this bar right here?
Yes.
It is a peak. How come I didn't, how come I didn't sell or get out or whatever? This happens several times in this code. So let me walk you backwards. I'll show you what's going on. All of these big letters, like right here where you see MA cross dash LX, the big letters are what the actual buy and sell statement is printing. That's where you put the parentheses after buy, and in double quotes, you put MA dash cross dash LX. So when I see the big letters, I know there's a moving average cross that was a long exit. Well, guess what, guys? There's nowhere anywhere near this place in the code where the 10 moving average crosses below the 20 moving average. That MA cross is wrong, or my code is wrong, one or the other, okay? Notice here, let me scoot down a little bit here. If you look right in the center of the screen, I'll open this up where you can see it a little better. Again, the 10 moving average is what determines where there's a peak or a valley, you know, where it's up or down. Well, right here, we have an MA cross long exit at 8 November. It's actually 6 November. When you print it, when it really happened was actually a little teeny bit, the bar right to the left of where the M is in MA cross. So the red bar at November, I don't know, 4th or whatever, is what decides. So this tells me that my code made a long exit because the moving average crossed. Well, it didn't. I'm using a 10, I'm using a 20. That's what I use in my code. That's what I'm using here. I'm either doing something incredibly stupid or I missed something, but this is not a correct entry. However, look what happens 2 bars later, this little teeny red bar right here. Okay, it turns out this little teeny red bar generates a buy on dip low. Well, how the hell did it do it when it looks like the bar to the left was higher and the bar to the right was lower? I don't see where that should have been a buy point. Now I can see where the little green bar could have been a buy point.
Hey, Richard,
Yeah,
your V, so first of all, your 100 moving average is going up. So you're only looking for longs.
right.
So you're going to look for a dip in the 3 EMA. That dip happened on November 8th. On November 9th, you got the finishing of the pattern. So now you have a local low. So the setup bar is November 9th, and it says the trend is up. I got a V setup. So go long at the market on November 10th.
Okay, now show me, is November 10th the little red dark
Yes.
G bar?
Yes.
Well, it doesn't meet the criteria. To
It
be a
does.
buy, it would have to have a bar to its right
No,
that's
no,
higher. And
Richard. The evaluation of November 9th. Put your cursor on November 9th.
well, I can't,
It's the
the
one
it's the
right.
ninth.
It's that one.
This should be the ninth.
So
The
this
green one.
bar, so that bar closes
Yeah,
and the code evaluates. The code evaluates and says, well, my 100 moving average is going up, so I'm only looking for longs. My 3 EMA is formed to the pattern of a V dip.
no, this is an upside down V. Look at the 2 red bars on either side.
No. You haven't got to November 10th yet. So November 8th is the dip. November 9th is when you know it's a dip. So at the close of the bar on November 9th, you've got a condition that says the trend is up because the 100 moving average is moving up. And I've got a V pattern up. And so I'm going to buy at the market of the next bar which is November 10th, which is your tiny little red. Yeah, right there. You're gonna buy at the open there.
Where is the bar that has a higher bottom on either side of it?
Richard, can you use your
You
head?
don't, you have to know what trade station's doing at each bar. So the key bar here is November 9th, which finishes the setup, the creation of the pattern of a V pattern. That bar is greater than the previous bar, and the previous bar is less than the previous bar to that. So you've got your V.
Oh, it's not a V. The big green bar is lower than the red bar.
Well, are you evaluating the close or the high or the midpoint? What is your measure? What part of that bar are you measuring?
The close.
Okay, so the close of the big green bar is way up there. The close of the red bar is way down there. And the close of the next bar is way up there. That's your V.
Okay.
So you've got it up, you've got a setup to go long. So your code says, okay, if I have a V setup and the trend is up, go long at the open of the next bar, which is the next bar.
Then on the bar after that, I should immediately exit.
No, you go long. During the formation of the bar on the 10th, you go long at the open because the previous bar, all your conditions for going long were true. So now during the formation of this bar you're on right now, you're long. Now at the end,
I get a short signal.
how can you have a short signal when your trend is up?
Because by the end of the 10th, the trend is now down.
Okay, I don't know I thought your trend was the 100 moving average direction.
I agree. The trend, I'm using the wrong word. The trend is continually up throughout this whole
So
evolution.
you're not going to take a short.
Correct.
So
But
you're
I'm trying
long.
to exit along when I do that.
You're long right there. You enter long at the open of that bar.
And during that bar, I should get a short signal, shouldn't I?
What? No. You're
Well,
not going
I
to get a
meant
short signal as long as you have a pattern where you've got a V going down, but you do nothing with that because your trend is up.
Okay, hang on a second here. Let me get it where it's as opened up as I can get it.
Sure.
Okay,
So first of all, before you even look at the tiny little patterns of V or inverted V, you say, is the trend up or down? The trend is up. So forget about upside down Vs. I'm not going to go short here.
I exit on those.
You exit on an inverted V?
Yes,
No
because that
matter-
indicates that the trend is just, that I've just hit a peak. It's the opposite of buy on dip.
Well, then, I didn't see that in the code.
All right, hang on a second. Let me fool with this a little bit here. And maybe
I thought your only exit was a 10% stop.
No, but well, maybe I screwed up. What I think is going on is right here. If I'm long, that's the position equals 1. Here I'm saying, do I have an upside down V?
Okay,
And the way I determine that is if I'm just using the fast MA, that's all. I want to know if it went up and is now going down.
okay.
And I asked the question by saying, if one bar go is greater than right now, so I'm looking up at the center from right now, and if one bar go is greater than 2 bars ago, I get this right? If one bar ago is greater than 2 bars ago, then I am at the end of an upside down V.
Okay, you're gonna be getting in and out a lot, but I mean, that is what your code is saying. So yeah, you should. So at the end of that day, you would have that pattern formed. So at the next bar, you would exit at the market.
Well, that's what keeps happening is I wind up, I'll buy on one bar and exit on the next one. So maybe,
Well, that's because
maybe this is not, maybe this is bad strategy right
To
here.
me, that's a bad idea. Because
Okay, well, obviously,
a three EMA wiggles a lot.
okay.
So you've
So,
already got the first half of a reverse formed just because your entry setup is always going to be a V with the first half of a down formed. So guaranteed, if your next moving average, if your next bar after entry is a little bit less than your entry, than your next one, then you've got the inverted V right there.
okay, here's something that happens very often. And I've looked on a bunch of charts. So if you're looking at the center of this chart, back to good old November 8th, in general, the price is going up. I got zeros above every bar. I am out. Somewhere in here, and it's hard to see maybe, there's a purchase. I know that because the red bar on November 10th has a little one above it. I have just bought,
Right.
okay?
You just
The
went
very next day, the bar has a zero over it. I have then sold.
right.
I didn't
So do
want
you
to sell.
understand? Do you understand why you bought on November 10th?
I got that.
Because you have the pattern of a V finished by that bar on the 9th.
I agree. I agree. I didn't see that. Thank you for
That's
showing
why
me
you're
that.
long. But now notice by the close of the next bar on which you entered, you've now finished the creation of a tent instead of a V.
There you
So
go.
now you're going to get out. But the trend is still up. And you haven't hit your stop. So I think getting out, just because of the 3 EMA pattern, is too little of a pattern to say, oh, I should get out now. Because like you got in that bar on the 10th and you got out at the open of the 11th.
Okay, so if I eliminate that particular code, because the only
And-
thing this does is it gets me out. It gets me out and it's getting me out the wrong time, then I can have other exits like my stop loss and my 2% and all that kind of stuff.
Oh, yeah, yeah. for
And
sure.
that'll replace it.
So
That
just,
makes sense.
just comment out that exit based on the inverted pattern,
Yeah, that makes sense.
because your trend is still up. So use your other stops to get out.
Well, I've got, like I said, I've got a stop loss here.
Right.
That'll work. So,
Now that peak.
and this will also work. Whoops. I think I just screwed up something here. This will also work if my moving average reverses and my fast moving average crosses below the slow one.
Right.
That will
Now,
happen.
the only other question I have about your trend definition, and because you have that as an exit, do you care if the 10 and 20 are above or below the 100?
As of right now, no, it's not in my code. I don't care about it.
Okay, so then you can keep.
I mean,
that.
it might be something I need to care about. All right, so let's comment that out and let's see what happens here. All right. Now let's see what happens with the code. Then all those immediate buys and sells. So now about my only problem is, well, there's two other problems I still have.
Okay,
Notice here, I'm still printing entry price equals 0. So I don't know nothing's changed on that. Here's another problem that I have. When I adjust my stop loss upward, so here I buy here on November 17th.
Okay,
okay? And the price rises. Notice the set of two numbers. The two numbers are the reds. I'll go to the next bar, the one that's got the first numbers. The low of the green bar is $16.17. The stop loss is $15.85. That's what those numbers are.
okay,
And notice each time I change the stop loss, the number goes up and up and up and up, and eventually it gets up to a point where I'm probably going to hit my stop loss as soon as I get a decline. Does that make sense?
yeah,
Okay, so here's the stop loss going up and up and up and up and up and up. And right here on November 29th, I'm entirely happy with it. My stop loss has gone from 14.55 up to 17.88. It's tracking nicely. I also did the math and it's 2%. What happened here? So this says on the 29th or the 30th, I sold as a result of a moving average cross, and nothing like that happened here. So I have to figure out what's wrong with that. Moving average cross for me, the code for that says the red moving average crosses below the blue moving average. That's the only time I do a moving average cross in this code.
let's look at your code and just make sure your greater than and less than is proper.
Yeah, if I had that backwards, that would do that. Let's bring this back up. And so we're doing sell on the moving average. Okay, that would be this guy here. So what I said was the fast moving average, and let me go up top. Notice that my fast moving average is 10.
Okay,
My slow moving average is 20.
okay,
Okay, and so what I'm saying here is
you said crosses.
that my
below.
fast crosses below my slow,
Okay,
but it didn't.
so let's go back to the chart and format your strategy. Just make sure the numbers 10 and 20 are still there. You know, because they're inputs, so you.
Oh, you want to look here? Yeah, I can do that.
So edit this, format the strategy.
Okay,
Not the
input.
moving averages, but the strategy.
Okay, but I'm double checking here. Fast is 10, medium's 20, slow is 100. So
Okay.
that's fine. So what do you want to do here?
Format the strategy.
Okay, format strategy, and there we are. And you want to see the easy language?
No. Format, click format.
Format, yeah, okay. Yeah. Fastest, uh-oh, what happened here?
There we go, right there.
I didn't do that.
Yeah, you did. I saw it.
I know I did it, but I certainly didn't see it. I'll be darned. Thank you.
You're welcome.
How long would I have looked for that one without seeing it? Huh. Okay,
No, don't click. Yeah, click close. There we go.
let's just see what happens. Oops, still says sell stop loss. Oh, wait a minute. Maybe I'm in
No,
the-
that's your, let's see. Is that print statement coming from your strategy code?
No.
Let's see.
So anyway, let me say this because we're just about out of time.
Okay,
So as you can see, I'm doing something. I'm in a process here and I can't find my stop share button. Ah, there it is. So you see where I am with the code. It's obvious that there are there are probably logic errors in there. You're right, that I reversed those moving averages, which obviously that was dumb. I should have caught that one.
that's okay.
But I guess my question to you guys is a buy on dip strategy something that you want to work on or have in your toolbox? That's my real question, because we've got to close out in about 10 minutes. So I'd like to hear from you what your thoughts are on just the dip strategy.
Oh, I absolutely think that's a viable idea that we should consider. And like we were talking about last week, different categories. That your setup there is almost identical to an idea that David Landry shares, which he calls his bow tie idea. So let me describe that because it's very close to what you're doing. His bow tie idea is that he's saying the first retracement after a trend change is the most likely to be successful. So he displays a chart, puts a 10, 20, and 30 moving average up, simple or exponential or whatever your favorite is. And then the bow tie is where those guys cross. So the left side's part of the bow tie, the right side's as it's fanning out, it's the other side of the bow tie. And you are using a 3 EMA to create a retracement pattern. I'm trying to remember, he maybe used a stochastic or an RSI to define the retracement. But no matter what you use, that's the fundamental idea. The trend changes, you get a retracement for a low risk entry area, and then you take off. Now you wait for confirmation by needing the pattern to finish. Another way of doing it is waiting for it. Since the 10 is above the 20 is above the 30, you've got a strong trend up. So another approach to it is you say, well, things are retracing. So if I get above the high of the current bar, while it's still retracing, that's likely the continuation pattern. Or you wait for the continuation pattern to actually print, then you're 2 bars away from the bottom because you had to finish that pattern. So it's all which ones, because the sooner you get in, the more whipsaws you have, the later you get in, the later you are in the move. So any choice has its ups and its downs, but you make a decision. But another variation on this is don't wait for the retracement. If the 10's above the 20 is above the 30 for the first time, then you go long. That's a trend change without a retracement. That's another idea that could be worth testing. So the breakout ideas, the trend change ideas, the trend retracement ideas, I think those are all commonly approached and worth our investigation as to what works and what variations work. And how do you measure the retracement? How do you measure the trend? You get the concept, you get the general principle down first, and then you decide, okay, we need a trend change entry system. Okay, what's going to define the trend? What's going to define the retracement? What's going to define the breakout? But they're all categories and strategies that have all sorts of variations by multiple people, multiple times.
Well, the thing that I saw in this particular pattern was that it's quick. I mean, you cannot have an uptrend without it happening. Now, you're right. It looks like the downside of being really quick is that you're going to get beat up a little bit before the trend really fortifies itself or takes off in a direction where it's going to stay for a while. So I guess it's all a trade-off on all of those things. But my thought is if I got into it quick and I could see what optimization did with it, I would be able to satisfy myself that either I'm beating myself up for no reason or that this is a pretty good idea. And I haven't answered that question yet. And I think what your answer right now is it depends. And that,
well, no, it's more than, you're right. It's that, but it's also, it is a good viable idea. those are the three of many of several categories that are basically viable and considered ideas. A breakout strategy like 15-minute opening range breakout and a 30-minute, that's famously been considered and traded by Tony Crable and Jake Bernstein and others. And then the trend, just go with the trend. So a trend change, a price channel defines the trend, or a moving average defines the trend. So forget all the bells and whistles, just if the trend changes, go long. If it's short, go short. And then the one you've just talked about, which is also another viable one, and it's the trend retracement strategy. And the advantage there, again, in my opinion, is you get tighter stops, so less risk if you are aggressive with the entry. The trend is already up, so cap as close to the bottom of that retracement as you can, and then there's your risk. And then you do a 1-to-1 or 1.5-to-1 or a 2-to-1 reward risk ratio, and then you leverage your advantage that way.
So, but that didn't really answer my question. My question was for all of you, does a buy on dip strategy seem like a good idea to you? If it does, are we willing as a group to put time into it to try and either improve this one or find another one or dream up our own? Or should I just keep working on this? And if I get something I like, I'll let you know and just leave you alone as far as buy on dips. What's your attitude on putting buy on dips as one of our work items for things that we would like to have as a result of this class? I really would kind of like just a yes or no from everybody. Do you want that in your toolbox, and are you willing to put some time into it here? And not full time, but just some time. That's the answer I'd like to hear. Just a plain old yes or no. Keep doing it or drop it.
My
I would
response is
say
yes,
yes.
Richard,
Yes.
but I think there can be
Yes,
things to do to improve the approach. One is not to have too many exits being tested at the same time. You're compounding the complexity. SDOF, single degree of freedom. Use one exit at a time when you try to test it. When it works, then add another exit strategy, so on and so forth.
Okay, so it sounds like we can spend a little bit of time on this. I'm willing to continue working on what I'm doing. As you can see, it was not finished for tonight, but I wanted to get the idea out there. If any of you have a buy on dip strategy you're interested into or want to research or want to bring to the group, then bring it next time and we'll look. And I don't care if we have a shoot off, among different strategies at some point. That might even be interesting in itself. So I think what I'm hearing is that some of you, because a lot of you didn't answer, would be willing to do some more work on this. Is that correct?
Yes.
Okay.
Yes.
Yes. All right, so that's the deal. I won't make a big deal out of it, but I will pursue what I'm doing. If you guys pursue things or bring your own things in or bring your own ideas in, we might go down that path a little bit. So it is almost time for Steve to come in.